Here's a headline that always sounds like good news. Borrowing just got cheaper. And here's the same week on one quiet street outside one house for sale.
40 buyers, one address, folders full of pre-approvals.
Every one of them just walked in stronger. The bank saw to that.
And every one of them is about to hand that strength straight to the seller.
Welcome to the auction. It never closed. You just felt the rules change.
So that's today's fight. When loans get cheaper, why don't homes?
Because the money was never the missing piece. The seats were.
Start where normal people start. I save, I get a mortgage, I buy. Cheaper loans should be good news for me.
They're good news for everyone. That's the problem. Watch what a rate actually sets. You don't bid with your savings. You bid with a monthly payment. The biggest one a bank believes you can carry.
Because the question at the kitchen table was never, what does the house cost? It was, what's the monthly? And the bank knows it. Hold on, walk me through that again. The rate drops, and the loan the bank offers me grows?
Same paycheck, same monthly payment you can afford, but cheaper interest stretches that payment across a bigger loan. Run it with round numbers. Say the payment you can carry is fixed. Drop the rate enough, and the loan it supports jumps by a fifth overnight.
And every buyer on that lawn got the same stretch on the same morning from the same headline. So the bank didn't hand me money. It raised my ceiling.
It raised everyone's ceiling. Yours and the other 39 folders on that lawn.
Every paddle in the hall just got bigger. At the same time, by the same rule.
That's the part people miss. A rate was never your private deal with the bank. It's everyone's deal, repriced at once. And the house count on that street? Unchanged. The bidding starts where the last ceiling ended.
Which means my new borrowing power isn't power at all. It's the new entry fee.
Now you're doing the math the headline skipped, so follow the new money. It lands somewhere. 3 somewheres, actually. First, the owner who did nothing. Bought years ago, sit still, and the bidding war repriced the asset underneath them.
And they'll tell you they earned it. The neighborhood came up, the schools got better, the line outside did that, not the paint.
Their reward for existing early. The auction pays seniority.
Second, the seller. 40 raised ceilings show up at once. That's not a sale anymore. That's a payday.
Third, anyone who borrowed to hold. Their debt stayed fixed. Their collateral floated up on everyone else's credit. Run the 3 together and notice what they share. Not effort, not timing skill, position. They were holding when the rule changed.
So the people cheap money helps most are the people who need it at least.
Careful, that's my line.
Then say the quiet part out loud. This is what stimulus looks like when it flows through an auction.
And the seated don't just feel richer, they spend like it. On paper gains, nobody cashed yet. Wealth on paper for the seated. A taller wall for the standing.
Now the other side of the hall. The renter who's been saving a deposit for 5 years. Same headline on their phone, very different math.
5 years of discipline. Let's price it. A deposit is a slice of the price. When the price jumps, the finish line moves. Farther than most people save in a year.
Their savings grow by addition. The target grows by percentage. That is not a fair race in any hall, so they ran faster and lost ground. That's not a race. That's a treadmill someone else controls. Every month they saved, the target climbed. The letter that said yes to everyone kept saying not yet to them.
And their rent?
Didn't fall. The landlord's building floated up with the auction. And everyone who gave up on buying is bidding for leases instead.
And notice who owns the buildings they're stuck renting. Often the same seated winners from earlier. The transfer collects twice, so the exit gets pricier at the same speed as the destination. There's nowhere to stand that doesn't bill you.
And the ones with no family to call, no early gift, no cosign, they're not even in the hall yet. Say it plainly. The cheap decade was a transfer, from the waiting to the holding.
A decade of that, and you get 2 countries on one street. One that logs in to admire its net worth, and one that checks the listings and closes the tab. Correct. And nobody signed it. It moved through a million honest bids.
That's what makes it invisible. No villain, just a rule that pays whoever got there first.
Now the twist you won't like. The ones who finally squeeze in, they buy at the top of everyone's stretched ceiling.
So even the success stories arrive exhausted. Savings emptied, both incomes committed, and no cushion left for the first leak in the roof. Maxed out on day one. One bad year away from the whole thing wobbling.
The prize for winning a bidding war is carrying the bid.
So cheap credit crowned the seated, taxed the waiting, and armed the last ones in with debt.
Here's the number the headline never shows. How many new houses did that lower rate add to the street?
None, not one. All that new borrowing power, and the street looks exactly the way it looked in spring.
None. Credit moves claims on houses. It does not pour a foundation.
So the one number the whole country watches can't touch the thing the whole country needs. Everyone watches the announcement. Nobody watches the empty lot.
Why the seats are scarce. Land, permits, who's allowed to build what, where. That's a different fight.
Its own episode, honestly.
Today, just hold the shape. The paddle side moves in months. The seat side moves in decades.
So bring it home. Next time a headline says, borrowing got cheaper, what should you actually hear?
Ask one question first. Do you already hold the thing that floats? If yes, a house or anything the bidding lifts, that headline cuts your cost and lifts your asset. It works for you twice.
It even works a third time. Refinance the old loan cheaper, and the seated keep the difference as spending money. If you're still outside, saving, your payment math improves for a moment. Then every other ceiling rises, and the asking price follows. And if you rent with no plan to buy, the wave still finds you. It just arrives on the first of the month. The same headline. A gift on one side of the hall, a head start you didn't get on the other.
Neither of us disputes the mechanics. We dispute what to do about it. I say, stop feeding the bidding. Let the ceiling sag, even if the seated feel poorer. Discipline now, or a bigger correction later.
And I say, expensive credit doesn't punish the seated. They're done borrowing. It punishes the next family at the entrance for a shortage they didn't cause.
Her mercy feeds the next round of bidding. My discipline thins the next crowd of buyers. There is no clean exit here. Only a chosen cost.
So we won't hand you a winner.
We'll hand you the question that survives every headline. Who benefits, who pays, and who's carrying the risk?